Go.
Hello, everybody. Welcome to a bonus edition of the Market Rant. My name is Joe Fahmy alongside my co-host, Tom Canfield. How are you?
I'm well this morning, Joe. I'm rocking the Dave Osprey blue light specials.
They're looking good.
I think I look strong.
We're
very strong.
We're going to look at some charts today, or as they say in Boston, we're going to look at some chats. We want to do this episode to give people a feel for our, style, a little bit of a perspective from, to take a little break. I mean, we'll still implement some psychology, of course, in this. And speaking of which,
it's all psychology, baby. It's all psychology.
So there's a quote from Denise Scholl that
Speaking of,
that I'll pull out to pull up to set the tone here. If you want to just maybe
right on. Let me read this out loud to the class. Thinking about thinking is known as metacognition. Cam, don't worry about that. And while the how of what to do is what everyone wants to know, you need to thoroughly understand the why first. If you don't, you won't believe in it. And if you don't believe in it, you can't feel it. And if you can't feel it, you won't and actually cannot do it. Okay, so this is in Denise Scholl, Market Mind Games book, which is a great book. I'll be honest, I've not read the entire book. I've skimmed the entire book, but I've read certain sections, and it's really, really good. And it hits me home because it talks about how it's okay to have emotions and it's okay to have feelings as a trader. And I got a lot of them. So I like that she says it's okay for us to do that. We just kind of got to figure out how to utilize them.
Okay,
but the point of this premise, just real quick so that we can get into it, is that understanding the why of what it is that you're actually doing and what it is that you're actually seeing on the chart and the technical patterns and whatever, it gives you conviction. You got to have a premise. You've got to have an understanding of stocks go up, not because the chart says it goes up, but because people are buying the shit out of it. Okay. Why? What's happening? Who are the players? What's going on behind it? All of that stuff, it helps tremendously because it doesn't matter if you're right or wrong. And this is really important to understand. And it may take a little while to grab. It doesn't matter if you're right or wrong. It just matters that you're certain.
Yes.
You know what I mean?
Yeah. You need some certainty and some conviction behind what you're doing. I think what you're trying to get is you need some sort of set of rules, or at least some baseline,
right,
to make the decisions that you're making.
And I know that everybody's different, and some people are like, I just trade the chart and I just trade the price pattern. And you know what? I do that by and large as well, but I'm doing it with underlying premise of knowing the stocks that I'm trading, knowing if they are in favor, knowing if they are going. I mean, I buy stocks that are going up when they are going up in a healthy market.
Okay.
So
that's a great way to sum it up.
There's a lot of definitions that go into all of that. What's a healthy market? What do you mean by going up? What trend are you looking at? Okay, I'm going to leave that more stuff to you because you're the expert on that stuff, and we align pretty closely on all that stuff.
Yeah, I think what you're trying to say is increase your probabilities to give you a shot. Put as many things as possible it doesn't mean, again, it's probabilities. It doesn't mean it's always going to be right.
Stack the deck.
Stack the deck to
motherfucking deck in your favor.
For me, to play off of what you said, yes, I want to check, be in a healthy market. There's a lot of definitions of that. 2, when we're in a healthy market, you said I want to buy the stocks going up. I want strong, fundamental, technically sound companies as well. There's some people,
and there's reasons for that. Yeah.
Right. There's some people who are only fundamentalists and never look at charts. There's some people who are only technicians and never look at the fundamentals. And I'm like, why is there such a battle between those two? Yeah. Why not use every weapon you have, that information, use it all? I'm not against fundamentals. I'm not against technicals. I use them both.
Right.
So I'm trying to put, seasonality is another thing about, there's just so many flavors, but for the most part, I agree. You want to be in, make sure you have the backdrop of a healthy market.
100%. 100%. And this is the other thing that we should make sure we say, listen, there's 1,000 ways to trade and 1,000 ways to make money in this market and 1,000 ways to analyze it. This is just what has struck Joe and me and the premises that we have built that make sense to us, that give us the logic that we need to have conviction in the decisions that we're making. And
Absolutely
that conviction is really what drives your success. You can have a bad premise, but if you've got conviction, you can still make money.
Yeah,
I
agree. And
scratch your head on that, but it's true.
Just to reiterate, and I'll pull up, chart of the markets, chart of the NASDAQ. Just to reiterate, I mean, yes, there's a million different ways to trade. I always say do what works for you. We're just giving you a view of some of the things we look at. That's all. Yep. And for me, I want to start with to make sure we're in a good uptrend.
Right.
And
are we in a healthy market?
In a healthy market. Why? Because 4 out of 5 stocks move with the general trend of the markets. Meaning when we're in a good market, for the most part, stocks will go up. And we're in a bad market, I don't care how great the company is, 4 out of 5 stocks will move in the general direction when the institutions are selling stock. So to me, it's important to pay attention right off the bat. Are we healthy and in a good trend?
Yeah.
Now, to play off of that some more is, I've said this a million times, where the big institutions control the markets. If you don't believe that, okay, go fine, buy your 100 shares. If I buy 100 shares, it's not going to matter.
Nobody gives a shit.
If Tom buys 3,000 shares, it's not going to matter.
Nobody cares.
It's your pension funds, your hedge funds,
yep.
your mutual funds. They will buy millions and millions of shares. And for the most part, yeah, I know there's dark pools or whatever, but for the most part, it's going to show up on the tape. They can't hide their hand when they're getting into these stocks or getting out of the stocks. So I say learn to interpret, assuming we agree that the big institutions control the markets, yep. Learn to interpret what they're doing. And that's why part of my routine is when I pull up the NASDAQ here, which is to me the go-to index. And as you've said, we're growth managers, which is why we focus on, maybe more on the NASDAQ or even the Russell than the S&P, at least me right. personally. I also think it's not only the leading index where a lot of leading stocks come from, but it's a larger sample size. You have about 3,000 stocks versus 500 in the S&P or 30 in the Dow. So I like the larger the sample size, the better. And I want to track, accumulation and distribution. Why? To try to follow what the big institutions are doing.
Yeah.
So when I pull out the pen here and I want to look at these big bars and I say, okay, last week, accumulation, and how you define that is a up day on higher volume than the previous day, or distribution would be a simple definition is a down day on higher volume. And the only one we had was a couple of weeks ago here. I think we had that reversal on a Tuesday or something like that a couple of weeks ago. But that's the only big bar, because even this big bar here was on lighter volume than the previous day. So my point is, and again, this is just interpretation and the whole disclaimer, this is presented for educational purposes and informational. Every disclaimer should just be, don't be an idiot. Basically, just don't be an idiot.
Don't be an idiot.
Yeah. The coffee's hot. You don't need the disclaimer that the coffee's hot. Anyways, but consult your financial advisor and don't be an idiot. And don't act on this and don't be an idiot. Anyways.
And don't fucking ask us, because we don't want to answer all those questions.
My point is, how I'm interpreting this is, there's one day of distribution the past 3 or 4 weeks. And that's telling me the big institutions coming off of this low have not been selling shares. They've just been consolidating, and you can see it a little bit better in the S&P 500. If you want me to pull that up, I'm happy to show that.
Doesn't matter. Yeah, that's fine.
But really quick, just to basically say that, okay, with the S&P, we've run up here and we've been in this range. But while we've been in this range, there's been very little distribution in this range.
And the reality is, and going back to the whole, this is the counter side of why matters in terms of what we're doing, understanding the premise of what we're doing, but why the market is going up doesn't matter. It's the fact that it is. Trying to understand, why are they buying? Why are they buying the shit out of this market? I'm sure you can come up with 100 reasons. I could come up with 100 reasons. What you're doing is you're looking at this thing and you're saying, this is what is. This is what is happening. What you think is going to happen does not matter. Your opinion, my opinion, market doesn't give a shit.
Yeah.
What is happening is what is essential to your development, as a trader, because it sets you free from having to carry a bunch of opinions. You can just look and go, okay, well, here are the facts.
Yeah,
The
that's
facts
a
are
great
that
quote.
fucking thing's going up.
That's
Stupid as it is. It's going up. Better buy it.
That's a great quote. That before I forget, I just wanted to say I love that quote. Don't focus on what you think the market should do. Focus on what it's actually doing.
It's a nicer way of saying be dumb, follow price.
Yeah.
You know?
Yeah. But no, we have to form our opinion because of this and because of that. It's supposed to go down, and I don't like this and I don't like that.
Right.
It's supposed to go up. And see, I hate perma anything. I'm not one of these I hate perma bears. I hate perma bulls too, because you have to be flexible. You have to be open-minded in your approach. I don't care what your time frame is or what you believe. If you believe that we're going to go up all the time, you're an idiot. If you believe we're going to go down all the time, you're an idiot. Meaning, there's called market cycles in the last 100 years, like Peter Lynch says, 30, 40 bull markets, bear markets, whatever. They're called cycles. And I, through my experience, have learned one simple word: acceptance. You just accept. There's going to be periods where things are going to go up and things are lined up, and don't be a perma bear. And there's going to be periods where we have recessions and corrections, and don't be a perma bull. Because before I go back to you, is I love Stanley Druckenmiller's quote of one of my biggest strengths is my ability to change my mind. In other words, he's saying be open-minded and don't be rigid in your thinking.
Just be observant. I mean, be an observer. Observe with curiosity. Just constantly be observing and asking yourself, what is happening? What do I see? What do I actually see? Yeah. So let's roll from there, because I want to get into looking at some daily charts because
okay.
The process.
I'll go back to MarketSmith. So.
While you're going back to MarketSmith, the process is, okay, the first thing is what's the condition of our market? Okay, well, our market's in an uptrend.
Okay.
How you defined uptrend is varied. Both Joe and I define that we're now in an uptrend. We don't have to get into the technicalities of that now.
Yeah, I mean, for the most part, it's, when the averages are trending and you can see here they're trending. I mean, just simple, above the 50-day, above the 20 days, a good, even a stronger uptrend. But I like to use even the 10-week, 50-day as a guide, up or down.
And I do a lot less of that analysis. I look at it, I take it into consideration, but at the end of the day, all I care about is what is happening with the leading stocks. Who are the leading stocks? And what are they doing? Yeah. I evaluate and have evaluated for 20 years my mood on what I think is going to quote unquote happen next in the market based on the performance and the price action of the leading stocks of that cycle. It's not the same stocks. It's not always the FANG stocks. It's not always the semiconductor stocks. It's not always the software stocks. It's not always the gold stocks. It's never the gold stocks. Anyway, sure, some goldies will come out and go, what the fuck you talking about, man?
The gold bugs are psychotic.
Okay.
But I agree with that. And I want to, emphasize one point is, first of all, what you said, everyone has different ways of looking at things. Also that I just want to make sure we're in a trend to start, but if you may be not looking at that as much, I agree with you. And there's nothing wrong with that. I agree with that. 90% of what I use to judge the health of the market is the price action of the leading stocks. Yeah. Sentiment, yes, you want the market trend. Sentiment is secondary because sentiment can give us mixed signals.
Right.
And there's a lot of news I just shut that out because you made a great point. Literally 3-4 weeks ago, if you just didn't know what was going on in the world, you'd be all in this market. Yep. And if someone listened to that, because you are shutting out the news. But anyways, I digress.
Shut it out.
90% is the leading stocks. Now,
is risk capital being put to work? Are people with really massive amounts of money who can do research that goes so far beyond what the news is giving you, getting down into the nitty-gritty of what's really happening, are they putting money to work in risk-oriented assets? Are they buying the high-growth names? Because they have higher betas, and so there's way more risk to those stocks. So are they putting money to work in risk assets, which means if they are, it shows up on the chart and it implies that they think that the market is healthy.
Yes. It's simple.
Our job is just to go, okay, let's follow that.
Right. Risk on or risk off. Because when they're buying millions of shares and you want to try to short into that.
I hate that. It's such a CNBC term, risk on, risk.
Sorry. I'm simplifying, and that's fine. I mean, it's all good.
You are a media personality, I know, and so you need to use that
I
proper
did a few
terminology.
episodes of Cops, and that's, my parents weren't really too proud of that, but that's my TV exposure is Cops. America's Most Wanted too. Anyway, so I like to look at the Russell to emphasize your point, because the Russell
Yep.
2000 is small and mid cap names. I can't think of a better signal of risk on or risk appetite or wanting to put money to work than into small and mid cap stocks.
And what's that chart look like, Joe? How about we fire that puppy up?
Let me look at the Russell. Let's take a look at the Russell.
No, you're going to have to back it out. You're going to back it out.
Back it out
Type
and bear
it in.
with it and type it in.
This is all kind of impromptu. Joe and I prepared like 3 minutes with drinks last night.
Right. And you started drinking at 9 a.m. too. So that didn't help.
I did. You're getting what our phone conversations often sound like, because we have absolutely nothing prepared other than just brains flying.
I know. People are like, look at some chats. I want you to pull up some chats. All right, so Russell has definitely got hit more because when the market went into correction, smaller companies will most likely get hurt by this. So it got hit 42% or something, but it is coming back. Same thing. There's a lot of accumulation in that chart. Now, since we both agree the price action of the leaders is what matters, I'm sure someone will ask, what are the leaders? How do you define the leaders? Give us some examples of what you're talking about.
We're so glad you asked. Thank you. Did you want me to? You're the one that's got the Market Smith up. I think, here's the deal. I'll tell you what I do. You
go ahead.
You going to talk? I'm going to talk. Who's going to talk?
Go ahead. You didn't seem like you wanted to answer that, but go ahead.
Well, I will, though, because I always want to answer. I'll talk over the top of you, as you know, and it's one of my favorite things to do.
That's all good. Go ahead, bro.
I've had some people chirp me about it.
Fuck off. I don't think they realize I don't care.
I know. Because when we're on the phone, you're always talking over me. Always. And it's great. I love it.
I know.
Anyhow, so I go through, and Marcus Smith's phenomenal for this, and I have scans that I've worked on that basically go through. We're looking for stocks that are the company's growing faster than the general market. Okay. And they're in industries that are in favor. So generally you're looking at stocks that are growing faster in industries or sectors that are outperforming. Stacking the deck, stacking the deck, stacking the deck, stacking the deck, best of the best of the best of the best. So, I end up probably on a weekly basis with somewhere between 50 and 75 stocks. That is my quote unquote weekly list. And from week to week to week, I do it. It takes me about 30 minutes now. And most of it's just a bunch of clicking and dragging inside the software because I've got my scans all figured out. And, for $25,000 a person, I'm more than happy to share those different scans with each and every one of you.
Don't sell yourself too cheap.
Just kidding.
Now, I think a good way real quick because you have your list, I have my list, but a simple way is just start with the FANGs. Start with, let's pull up, when I just want to go through a few of them. When you look at Facebook and you say, okay, we're talking about liquid leaders that are growing, let's say, 10, 20, 30% or more earnings and sales growth, all-time high. You look at something like Apple, forming a nice base and a nice handle.
Oh,
that looks pretty decent.
That looks pretty good.
I know Microsoft's not in the FANGs, but it's the largest market cap company, and that looks like a nice cup with handle to me.
Oh, look at that coil.
I know. Don't get too excited. Wait for the market to open. Amazon, of course, as Amazon, Google. I mean, these are, new highs. So if you even just want to start with the FANGs or your big cap, even some Walmarts and MasterCards, people should know some of the big, liquid leaders. Bro, that gives you an idea. No, I'm just saying that gives you an idea for the health of the market if you just wanted to do a quick
We could go
look
through and show you, but put up Twillo. Just put up TWLO.
Okay.
Let's just step back look at the chart and then step back and let's talk about this for a second. Here's a software company. You can see down below how it's growing sales nicely. It just went profitable, all that stuff. Their PE is a gazillion. Right. It was a gazillion before it gapped up and when they announced earnings.
Is a whole other rant episode, so we'll save that.
Yeah. But psychology of the market, the thought process of the people with a lot of money. This stock just went from 100 to 180 basically in 4 days. And then once it went that far, it went fucking nowhere but sideways. Nobody sold it. Why? Why? Because they think it's still going higher.
The why
That's
doesn't
why.
matter. You just have to pay attention.
It's not,
to
oh, they're just squeezing out shorts. This stock's too big to just be controlled by short squeeze.
This is a 30 billion market cap company.
This is not a pump and dump, people.
When stocks make big moves and barely give any back, you have to fucking pay attention to that.
But it's
period, end of sentence. You
think
have
of
to
the
pay
psychology. Think of it. They still think this is going higher. Throw up Nvidia. Fucking stock that I fat fingered. I hate that stock. Love that stock. Hate that stock.
The schizophrenia of being a trader.
I mean, this thing goes and bottoms out around 200, and then it starts to creep up. And then, and Joe's been buying it the whole way up, making money hand over fist, and I'm nibbling here and there and whatever. But the point is it just keeps going, and they keep buying it, and they bought it all the way up into the earnings announcement. And you're like, can it actually go higher? And by the end of the day, they just kept buying it. It's closed down. That's a nice little tight handle there.
I want you to help answer a question because, and I'll preface this with I have tons of losers, so I'm not only going to talk about a winner I had, but
right.
I bought this for my clients somewhere in here at like 270, 280 and added more on the 20-day. And I even tweeted out right when it was at 290 something. I said, look, this is buyable here. It's not a recommendation. I hate that stupid disclaimer, but anyways, it's buyable here, and you could possibly get a run up into its earnings. Now, I had some people email me, and they said, you know what? I bought it at 305, 306, and then, it came down, and it came down to 309, 310. I stopped myself out. Meanwhile, I traded it to 335, took some off at 355, still hold a core position, full disclosure. Right. But their question, again, I'm not bragging about the trade. I'm trying to get to a point here of they asked me where I saw the chart, and I didn't trade it as effectively. I took it for 30 to 60 points, still have some, and they're like, I took it for 3 or 4 points. Help me out. What causes the conviction that you have versus how come I didn't see that, or how can you help me with the conviction? I don't know. I mean, before I have trouble answering that because without sounding cocky or arrogant, I don't, it's intangibles. The God's honest answer is experience. It's intangibles from doing this for over 20 years where I look at a weekly chart and I say to myself, has it gone on too much, too far? I'm like, this hasn't gone anywhere for 2 or 3 years. And the Livermore rule that I talked about, which is in How to Trade in Stocks, one of these books, I just happen to have it handy.
That's a damn good book.
It's a great book. You can read that in an afternoon. I love that book, How to Trade in Stocks by Jesse Livermore. But we'll get into a couple books in a minute. But he talks about breaking round numbers, breaking 100, going right to 110. So breaking 300, going right to 330. So my conviction was weekly chart. Absolutely love the story. It's been consolidating for a long time. Huge earnings. The Mellanox acquisition is helping them with exposure to data centers. I'm huge on AI, machine learning, driverless cars, gaming. I mean, they are the leader in so many different verticals. And these are things that I maybe you can help me with this because I'm not trying to be secretive. I'm just saying I have trouble answering the question. Well, what gives me the conviction, and when someone asks me for help to have that conviction?
Okay, I'm gonna answer that question for you, but I'm also gonna say it goes a little bit to what we talked about Saturday. You want to answer what gives you conviction, and I'm saying why. I mean, other people are doing different things. Like for me, I'm trading that stock, and I'm finding support levels on the 60-minute, the 30-minute, the 15-minute chart, and I'm buying every single support level as that thing pulls in.
Okay.
Why? Because I know it's in trend. And I'm getting quick explosions, and I'm taking my money because the odds that stock's going to keep going higher are pretty good. And it's going to have little pullbacks along the way. And I have a way of finding those support levels, and I'm buying those support levels. Yeah, I'm taking it for 3 points, 5 points, 8 points, 10 points sometimes, whatever, or getting my ass handed to me for 5.5 points in the aftermarket. But
you've traded this one very well.
I've traded this one a lot.
We're just on different time frames where I'm entering it and hanging on, and you're just trading different
What
levels.
gives you the conviction? Okay, put that weekly thing back up. Then I'll show you what gives you the conviction. I wish I had my freaking mouse. I could do.
Well, you can share your screen and
let's do that. Let's do that.
Why don't you share yours? But while you're doing that, and you can just flip over and share yours. While we're doing that, a million things go through my head, which is, the feel of the market where Nvidia,
That's a pretty chart.
that's
a pretty chart. Sorry, go ahead.
That's okay. I'll talk.
Talk over me. Let me find it.
While you pull up, Netflix and Amazon just ran up ahead of their earnings. So I was like, okay, well, the flavor of the market in this style, maybe Nvidia runs up ahead of its earnings. Also coming out of a big base. Also huge institutional support. Also some option activity. Also some conviction that I have because I love the company. But I want people to have their conviction, going back to what you said with Denise's quote about that's our goal as traders. You want to enter something with conviction. You don't want to be trading out of a position of fear. You want to trade out of a position of strength. That's why you want to give yourself as many things as possible to help with your probabilities of success.
You're doing great, man. I'm just like,
I don't know if you wanted me to keep talking or not.
Well, I'm just kind of, here's the stuff that MarketSmith gives you that gets that will get Joe very excited and convicted.
That's chart porn to me when I see that acceleration, triple digit earnings growth the past 2 quarters.
Keep talking, baby.
Triple digit earnings and just, I mean, why did it go in a base? If you want to look at the left there on the earnings, it did $5, $6, and then it dropped to $5.79. So why do stocks go up? For the most part, because their earnings and sales go up. I'm just talking while you're pulling up the chart.
Yeah,
why did it consolidate? Because the earnings consolidated. But go ahead.
But you've got last 2 quarters up over 100% in earnings. Sales are growing like a weed. Big estimates both increasing on for 21 and 22. 99 is the best you can have. A plus means in the group means it's in one of the very top performing groups. Accumulation, composite rating. Okay, weekly. Here's the shit that just. And you guys are gonna be like, well, where can I get MarketSmith? I'm not telling you. Other than at MarketSmith. And ibdinvestors.com, et cetera. Right. Look at this. Okay. These are the number of funds that own Nvidia. 2,500.
That's a shitload of funds.
Next quarter, 2,650. Next quarter, 2,900. Next quarter, 3,137. Anyone notice a trend there? Anyone? More and more institutions are getting involved in this stock as it goes higher and higher.
The big institutions control the market.
So
pay attention.
And do you think all 3,137 institutions with a lot of money, some maybe not so much, some maybe a ton, do they have a vested interest in seeing that stock go higher? I think they do. So you just kind of, it's stacking the deck, and that's what we're talking about. Forward growth, huge. Increasing number of funds, huge. Great group, great company, yada, yada, yada. It just goes on. It goes on the list. Joe owns it, keeps it, trades that as a position trade. I'm in and out and in and out and in and out, but I'm watching Nvidia every single day.
But the one common theme is we have different time frames, but we're, for the most part, in the same basket of stocks. Because that's what I'm talking about, giving yourself a chance. Market's healthy. When it's healthy, find stocks with great technicals, great earning, great fundamentals, and you can trade whatever time frame works for you. Right. And you trade shorter and you're buying the shit out of it on every support. I entered in 280, 290, and I've held, for the most part, the core position, traded around another one. But my point is, at least no matter what time frame you have, at least we're giving ourselves a shot.
100%. So what do I do? Okay, let me, I'll just show one trade. And then since all I've ever done is shown you guys how much money I lose, I'll show you one I actually did right. Okay, let's go back to Netflix. Netflix explodes out of this base on monster volume here. We love that. We love huge volume when it's breaking out like that to new highs. Numbers are good. Numbers are really good. It's got all these things over here, all these bells and whistles we like. So we love Nvidia or Netflix. Okay. Yeah. I missed this whole damn thing. The entire thing. Right? But it breaks out right over the top of that thing right there at 394, 394.52. It's at 393.52 or whatever. But that's what I call the pivot. It was resistance. Tried to break it, tried to break it, tried to break it, tried to break it, couldn't break it, failed. Nice, solid resistance. All the way across over into here. It just builds in all these levels. Okay, so I got that line on my chart. And I'm going to take you over to TC 2000, which I kind of use. And here's that same line. This is an hourly chart right here. Okay, I'll shrink it down. Here's the same thing. And it comes in and it finally breaks out. I missed this whole thing.
Did you share? Are you sharing TC 2000?
Am I not?
No, it's.
I'm son of a gun! I did it wrong. Okay, hang on.
I'm still seeing MarketSmith. So.
Oh God, I'm just. Because you know why? Wait a minute. Let me figure out what.
Go to new share. Go to new share.
New share. TC 2000. I'm still learning the software.
That's okay. It's all good. It's all good. There you go.
I'm a pretty simple guy. It was resistance, blew through it. So now it's probably support, right? You got a lot of people that got involved right here and they want to defend that price. So I draw that line and I'm just kind of watching and waiting for it to pull back. And on the morning of whatever this day is, all of a sudden the market's actually fairly healthy that day and Netflix just kind of starts fading again right off the open. This is the first hour right here.
Yeah.
And I'll size it out and I'll be damned if it doesn't come right down
to that same
line.
So resistance becomes support.
Resistance becomes support. And it just tags it and it sits right there for about 2 5-minute bars, if I remember correctly. And then
you're salivating at this point.
I'm buying it. I'm not even waiting. I'm buying in a portion because I know that if it goes under here, I'm wrong.
Okay.
So I buy a little bit and then all of a sudden it takes off over the top of those 5-minute bars and I buy a little bit more. And then that thing rips. That bar 17 points.
It's a nice trade.
I mean, if you take that down, I don't even know if I can still do it over here and shrink it down enough. There it is. There's the 10-minute bar, comes down, tags it, goes up, and then it just goes straight up to about 414 right there.
Okay.
So it went from 395. I think my net entry was about 395.80 or something like that. And it went straight up to 414 in however many bars that is. 4 or 5 10-minute bars.
That's a very short period. Yeah.
Like as a day trader, that's a hell of a trade. That's a hell of a trade. And so all I'm doing is using those same stocks that Joe's in love with. And it's the same stuff that I did as a swing trader. I'm just doing it as a day trader now, and I'm stacking the deck in my favor. I'm looking for healthy, strong stocks. I am only a long trader when the market is healthy. I do not short stocks right now. There's not a stock out there I'm going to short right now because the market is healthy and there's too many healthy, strong stocks that I can find pullbacks to get involved with. So I'm tired of overnight risk because I like to be aggressive, but the stress of overnight risk over 20 years kind of wore me out. And I found that I was getting less effective and I was building more fear into my trading as a result of all that, carrying all that risk. And so I shifted to day trading where I feel like I can be way more aggressive with stocks and just treat them on a daily basis when they're in trend.
But you recognize that. That's 90% of it right there is you recognize what works for you. You recognize what fits your personality. That's why I always encourage people to trade what fits their personality. You know, I'm going to share one more really quick. Just to talk
fire away.
Because biotech's been a great, hold on, there we go. I just want.
This one is now on my list.
So. One of the things really quick, it's coming out of a base here while the market corrected. You can Seattle Genetics, you can call it, and Vertex is similar charts where it bounced off the 200-day double bottom here. One of the things, since we did say we're going to talk about charts, is that O'Neill talks about, which is in another book, How to Make Money in Stocks, which is right here. I think, honestly, this isn't a plug for the book. It's just, if you want to learn chart reading, go through the first 100, 125 pages of this book and just study those charts. Just study them, photographic memory, ingrain them into your head. One of the things also O'Neill says in the book is when you get a follow-through day, which is what we got on April 6th, meaning a signal that the market could be shifting, look at the new high list. So why I bought this for clients at around 123 was I had a heavy cash position during the correction, and I said, you know what? Vertex and Seattle Genetics, you can look up Vertex as well, was on the new high list the day of the follow-through day, meaning the relative strength stuff I do. The theory behind this, to make it very simple, is the market just got annihilated in the month of March, okay? And we have a potential shift in the markets. If that didn't bring a stock down, most likely not much is going to bring it down.
Right.
Again, probabilities. The market got killed. This is at a new high as the market's bottoming. I bought some at 123, started position, added some at 120, and I basically held this because the leaders tend to make new highs around when the market bottoms. I did tweet out 166. I took some off, and I have a core position, and it's down to its 20-day. And now, how I stack the deck in my favor is it is one of the stocks making a new high, relative strength. Number 2, great story. I think this could be a big pharma name. If you have patience, could turn into a bigger name. 3, I like to pay attention to what the big biotech guys are doing. The Baker brothers, who are some of the best in the business, have a 30% position. They manage 20 billion people. They have 30% of their fund, probably more now actually, in this stock. In other words, if it's good enough for them, it's good enough for me. So
That's
I am
conviction.
trying, I am trying to, I don't mean to ramble. I'm just going through. Sorry if I'm talking so fast. Just every single step in my head to stack.
You're stacking it.
I'm stacking the deck with the higher probability chances. Full disclosure, I still hold a core position for clients. And I have to say that because whatever. But my point is that,
I don't know any of it.
That's
make fun of me every day.
That's the beauty of what you do, because you trade your own, and it's a beautiful thing.
But if that bitch takes off from there, I'm all about it for about 2-3 hours.
Really quick, since I mentioned Vertex, and I just wanted to show the same thing.
Oh, you're killing me. More charts.
Just really quick. I know you hate charts. I'm just showing
charts.
I'm just showing
I don't know if you guys realize that or not.
New high on April 6th, retested that 250 and holding up well. So anyways, I just wanted to show the example of after the follow through day, start with the new high list. Now that doesn't work for everyone, because most people, it's counterintuitive. They want the stuff that's beaten down, and there's no right or wrong. I'm a growth manager. I want strong stocks. I trade strength. That's what I'm looking for. If you're a value guy, I don't care if you want to buy the airlines and the cruise ships. Just understand, I don't have 2 or 3 years patience to wait for them to possibly
I can't wait
come
that
back.
long.
I'm talking to a day trader. You don't have 2 or 3 years.
I can't wait more than a half a day. I know it's terrible. So the point with all this is we just want you guys to understand where we come from. I mean, the reason why we like the market, and the reason why we show charts every once in a while about how the market showing strength and whatever, is because you got growth stocks that are they're ripping the shit out of them. They're going. We could take you through 50 charts that just look like this.
We could do this all day. We could do this all day.
They're all over the place. They're in software, and the software is getting really extended, but some of the semiconductors are coiling and really setting up, and so there's going to be, it looks like there might be, they may rotate into theirs. It's just, the point is risk capital is getting put to work. The Fed is just, pumping shit into the market, and it's going straight into these growth names, and they're buying the shit out of them. And who in the hell are we to argue with it? Don't fight it.
Well, to your point about the Fed, really quick, is when I say the big institutions control the market, some people might say, but no, it's the Fed. There's a little caveat to that, meaning the Fed is providing liquidity and low interest rates to allow the big institutions to put money to work and put risk to work.
Yeah.
So yes, the Fed is a backdrop, but at the end of the day, when the Fed is tightening things up, those big institutions will bring things in. When the Fed has got a, pretty, loose monetary policy, the big institutions are like, hey, the teacher's out of the classroom, let's play.
Yeah. And that's the nice way of saying the Fed is basically going, hey guys, here's some free money. Go buy the shit out of the market.
We're going to help the bond market. We're going to help you zero rates.
We can't buy equities, but you sure can. And here.
Yeah. So, but again, at the end of the day, it's the big institutions.
Like their daddy.
The big institutions. I wish my daddy was the Fed.
Go buy some ice cream. Go buy some ice cream.
That's all I got. I got baseball cards and ice cream.
Yeah.
The big institutions get to buy billions of.
All my kids are home now, and so that's what I feel like I am again. It just, the wallet comes in.
Yeah, you're the Fed in your house.
I am the Fed. I like that. That gives me a sense of purpose again.
They can't address you as daddy. They address you as Fed chair.
Okay, so let me just. Joe loves charts. And
can
I
talk
love
about him all day.
Oh, fuck, you can talk about him all day.
I know, you have to shut me up. You have to shut me up.
I can't talk about him for more than about 30 seconds. It just absolutely drives me nuts. It's like I got a way that I read charts, and I don't like to talk about it with anybody, quite honestly, because I don't give a shit what you think. I don't give a shit what Joe thinks. I don't give a shit what my followers think. I don't care because I'm so protective of the way that I see things that I don't want any interference. I'd much rather talk about the emotions and the psychology, because at the end of the day, that's what I think it's all about anyhow, because I've seen guys read charts 10 times better than me. And
there's a lot of different ways to interpret the charts.
There's so many different ways.
Yeah. We just wanted to mix things up because the psychology is a part that is honestly 80% of this.
Yeah, but I want you guys to know, Joe wants you to know that this is kind of where we come from, and this is how we see the world. We execute it differently, but we see the world in a very, very similar fashion, and we wanted you guys to have that backdrop. And if you have further questions about how we do all of this, make sure that you only ask Joe. Because I don't want to talk about it.
Because you have your email on auto reply with 2 words. Exactly. All right. I think that's enough charts. I appreciate you giving me the opportunity to
That was awesome though, man.
It's fun.
Listen,
I think it's good to mix it up.
I love talking about it with you because I always learn from you, and you, dude, you're good. Like you're good.
Thank you. I learned the psychology part from you, and you've been very helpful with that. And that's why we just want to, mix it up and help people out in different ways. But I
hope this was helpful.
I think the stories and the psychology, we're going to obviously continue to do that, and maybe hopefully bring in some interesting guests maybe sometime. Right. We'll see.
Pretty sure I'm going to do something really stupid next week and lose a good chunk of change somewhere, and we're going to get to talk about it. And Joe's going to make fun of me, and it's all going to be great.
It's all good, brother.
Awesome.
All right.
I got to go. I got to be by the pool.
All right. Thanks, guys. We'll see you next time.
Sounds good. See you, buddy. Bye. Yep.